And ladies and gentlemen, like we were promising you, the TCS numbers that were expected almost 45 minutes back are now finally out, and what we have at the moment is the profit after tax. That's at 9,008 crore rupees for the quarter that's under review. The operating margin, meanwhile, at 25.5%. If you look at the scorecard, the revenues, the figure that we're still waiting for, but this is all we have at the moment. Profit after tax at 9,008 crore rupees and operating margins at 25.5%. If you remember, the TCS CEO had, Rajesh Gopinathan, the MD and CEO, had been on ET Now talking about how this quarter, earlier in an interview, this quarter could see the kind of momentum of growth that we have been seeing. Meanwhile, revenues at 45,411 crores. That's up 3.9% quarter on quarter. If you look at it year on year, the revenues have come in higher by 18.5%. Poonam Sane, who had brought you those street expectations of TCS early on the show, is now joining us live. So Poonam, there you go. PAT at 9,008 crores, operating margins at 25.5%, revenues at 45,411 crores. Along expected lines?
Right. If you look at the revenues, the rupee revenue of 45,411 crores is fairly in line with what we were working 9%. So yes, that's the number which is in line. Operating margins, it's slightly lower. We were working with an operating margin of 25.8%, wherein we're seeing the margins of 25.5%, and also we're seeing the profitability to, of course, come slightly lower. It's at 9,008 crore versus our expectation of 9380 crore in terms of the profitability. So yes, our revenues are in line, profit is a slight miss, and margins, I would take it as a fairly slightly in line itself with what we were working with. That's very well. $8.1 billion is the that we are seeing during this quarter, and management also states that in their press release that the constant currency revenue growth is at 16.4% YOY. We were working with a number of close to around 3.5% on a sequential basis, and here we're seeing constant currency growth of 16.4%. Industry verticals, ex-regional markets and others have grown at a pace of 4.1% sequentially and 18.5% YOY in constant currency terms. Also, with very heavy net income, management also said that
Okay, let me also welcome on board then Amit Chandra. Amit, I don't know how the numbers look to you, but the ET Now scorecard, it's an inline revenue set, EBIT margin is well in line, and the PAT has fallen shortly below expectations. How are you reading into the numbers, Amit?
Yeah, hi. Yeah, so in terms of the headline numbers, obviously, the numbers appear to be in line. The margins also is in line with slightly lower than what we were expecting, but that is largely related to the like wage hike that has been given. And the interesting part is that the attrition number has not risen, so it is at 8.6%, which is a very impressive number, because we have been hearing a lot of things on the supply side. So I think like TCS has been able to retain talent, and that is what is impressive. And also in terms of the order bookings, I think at $8.1 billion order bookings, it's around in terms of book to bill, I think it's around 1.2, 1.3 times, which is also in line with expectations, because the order wins in the last quarter has been also like pretty strong, and the strong order win momentum continues. So that's the initial reading from my side.
I think we have Omkar as well on the phone line with us. Omkar, hi, good evening. How are you reading into the management numbers or are the TCS numbers? I was just looking at the management commentary. Rajesh Gopinathan is saying that he's humbled that in a personally challenging quarter for many, TCSers have demonstrated phenomenal character in helping each other, be meaningful to the communities, delivered on our commitments to clients. And he says on that backdrop, the business in North America, BFSI and retail have all shown an appreciable growth which underlines the resilience of their operating model. He says also relevance of their offerings and above all the passion and dedication of their associates. Also goes on to say that given the variants of the virus and fears of a potential third wave, they are watchful of the emerging situation and remain optimistic of the opportunities in their core markets as well as verticals. They are well positioned and operating diligently to participate in them aggressively. The word coming in from the COO and the ED, that's N. Ganpati, he says we overcame the challenges posed by the second wave in India, taking some very practical approaches, and they're very satisfied that the delivery of their client engagements was kept on track. Once again had a superior quarter with TCS of about $8.1 billion, which is broad-based across markets and verticals. G+T themes, he says, are seeing traction in the marketplace and they're delighted to sign their largest SaaS deal ever for TCS Bank CS, a global platform on the cloud during the quarter. Also a word from the CFO, that's going to be, I guess, more something that the market is going to read into more perhaps, given that this is a muted quarter from a market perspective. Samir Seksaria says that we crossed the $6 billion milestone in the quarterly revenue this quarter. In addition to our annual salary increase and promotions, we also undertook one of the largest vaccination drives in the private sector. Despite this, he says, and headwinds in the regional markets, we expanded our first quarter operating margin year on year, reflecting the inherent resilience of the business model. Looking ahead, he says, we stay focused on making the right investments to power our expansion in the growth and transformation opportunity while sustaining our industry-leading profitability. I think it's a very positive commentary if one were to look into it. We have Omkar as well as Sudhir too joining in the phone line. Omkar, hi, good evening. How are you reading into the management commentary? While sure enough it was a muted first quarter, but looking ahead, the management is pretty hopeful of how resilient the business is going to be. And TCS like companies are not really looked at on a quarter-to-quarter basis. These are decadal compounding growth stories that one looks at even from an investment perspective.
Yes, good evening, ma'am. And yes, of course, there is a strong and positive commentary from the management. The previous year was a muted in terms of the CC revenue growth, but this time I think the company has emerged with a strong deal wins and its order book, and ramping up on those deals will help them to gather a strong revenue growth momentum year ahead. My views on the Q1 results are the results are mainly into the much in line with our expectations, and we were expecting some decline in the margins because of the wage hike that they have given. That is also on our range. The order book, however, has come up at $8.1 billion, which is strong. In previous quarter, they have the deal wins of $9.1 billion. So they have the consistent deal wins in the quarters and likely to have the growth in the forthcoming quarters as well.
Okay. Sudhir, hi, good evening. While the stock is trading well above the recent buyback price, that of 3,000 rupees per share, it's up roughly about 3% in the last 1 month and 14.5% roughly year to date. Having said that, it's down about 4% from its record high that it clocked end of June as recently. Do you think after these numbers, we could see a muted response from the market? Could the stock dip a little further from 32.50 thereabouts?
questioning. So it will be difficult to predict on such a near-term basis. But one point I can make about the results is that if you actually look at it's a slight miss versus consensus estimates and versus our estimates as well. Miss at the revenue level, at the margin level, and at the profit level as well. But having said that, I would caution you saying that the dollar revenue and constant currency revenue numbers are not yet out for the full company. I think in the press release they had just mentioned about the growth markets ex of the regional markets. So we have to be mindful of the fact that the dollar and constant currency growth numbers are not yet out. So subject to that, my initial reading of the result is that it's a miss, versus our estimates and versus consensus estimates also. But the bigger trend that you should note here is that if you look at the growth rates have been trending towards the pre-COVID sort of growth rates, and in terms of the valuations, if you see, we are almost looking at 40% sort of premium valuations compared to the long-term pre-COVID averages, and the growth rates are kind of trending back towards pre-COVID averages. So definitely, valuations look bloated in the context of the growth rates that the company is currently reporting. Of course, I understand in this quarter they would have seen a little bit of an impact due to the second wave impact in regional markets, so on and so forth. But even excluding that, it's largely in line with the first quarter. Even if you keep aside the second wave impact in India and adjust the reported numbers for that, more or less we are looking at growth rates which are in the same ballpark as the first quarter or typical June quarter growth rates before COVID. And one should note that this is seasonally the strongest quarter for the industry as well as for TCS as well. That's my initial reading.
And a very pertinent point, actually, many of them that you've picked up. Sudhir, if I could get you in here as well, would you agree with Omkar that while so far a valuation metric hasn't really been applicable to IT in the kind of tremendous growth that they've seen post-pandemic, but now with the stock quoting around the 3250 level and after this muted set of earnings that they've delivered, could we see the stock ease off a bit?
Yeah, I definitely think so. Again, I would beg to differ from Omkar. My reading of the result trajectory over the previous 3 quarters is that the sector had seen a sharp dip in June 2020 because of the pandemic, and after that we had seen a sharp recovery, almost a mirror image kind of a recovery in the September and December quarters. So we had seen a sharp 7% sort of sequential dip in June, followed by a 5% and another 4-5% sort of a recovery in September and December quarters. So I would read that more as a recovery than growth or improvement in the underlying demand per se. So that's where probably I would differ from the other gentlemen on the panel. And yes, to your other point that the numbers look little muted, and the initial remarks, at least I would not say the overall commentary, at least the initial remarks, and even the order booking was pretty much in line with the previous several quarters average, and the initial comments seem to be little defensive. So I would definitely think so that valuations may be tested post the muted result this time.
Omkar, would you be reworking your price targets at all? Even if you were to wait out for the management commentary, we should be just any minute now, we should be dipping into the press conference. A, the 3 things that you would look out from the management commentary, and B, analyzing those, would you be reworking your price targets at all?
Yes, sir, definitely I'll rework with the management commentary because we would like to know the outlook is going ahead, and in terms of vertical and ramping up those the deals that they have grown in previous quarters. So I would like to listen to the management commentaries and then I can rework on the valuations as well going ahead.
The segmental revenues as well. Growth continues to be led by life sciences and healthcare. It's seen an uptick of roughly about 7.5%, 7.3% on a sequential basis, and that's an uptick of a solid 25.4% on a year-on-year basis. Retail and CPG as well have bounced back to double-digit growth, growing about 4.4% on a sequential basis and 21.7% on a year-on-year basis. BFSI has seen a jump of 3.1% on a sequential basis, manufacturing 4.8% and 18.3% on a year-on-year basis. Technology and services have seen a growth and a jump up of about 5% sequentially and 12.3% on a year-on-year basis. Communications and media 1.7%, and they have all seen significantly improved performance segmentally. Omkar, if you would want to comment on the segmental revenues while we're still awaiting the constant currency as well as dollar revenue numbers.
Omkar, so that question is for you.
Hello? Hello, I'm audible? Hello?
Yes, Omkar, you are. Yes, go ahead.
In terms of verticals, the company has so far in this quarter reported broad-based growth in terms of all of the verticals have shown with strong growth in this particular quarter. But in previous quarters, the retail was majorly a laggard, and due to pandemic and the COVID outbreak, but that might there might be a strong recovery. So it's going to be an overall gain in terms of
numbers. It's an uptick of 16. Okay, Omkar, dollar revenue has come in at 6,154 million. That's an uptick of 16.4% on a year-on-year basis. At $6,154 million, it's slightly below at least what the ET Now polls were penciling in. How does it stack up as opposed to your expectations and your polls? So Dev, the dollar revenue that stands at $6,154 million. It's slightly below the ET Now estimates. Does it stack up with yours?
Yes, it is below our estimates as well. And especially if you look at the segmental numbers, I would draw your attention to a couple of segments. One is life sciences and healthcare. This has been a key revenue growth driver for most of the IT companies, starting from the large caps to the mid caps also over the last 1 year. But one point I would like to highlight here is, a lot of healthcare companies across the world, or even a lot of governments across the world, they have been incurring some ad hoc spends on IT systems at this juncture, to build the contact tracing applications, to build the vaccination applications, so on and so forth. So a lot of what we are seeing in terms of the growth in life sciences and healthcare may be ad hoc one-time work, which will not necessarily repeat, let's say, once we are in an equilibrium post-COVID. That is one. And another point I would like to draw your attention to is in terms of continental Europe, which happened to be, the biggest growth driver for TCS in the quarters before COVID. That has also shown a bit of a muted performance in this quarter. Of course, there are some segments which have done well, but these are the two standout points for me in the vertical wise skills.
Okay, we have Amit as well back with us. $6,154 million, Amit, is the dollar revenue. It's up about 2.8% on a sequential basis and a 16.4% uptick on a year-on-year basis. That's fallen short of our expectation, Amit. What were you penciling in?
Yeah, so we were at around 3.6% sequential growth. So as it was discussed, it is because of the impact of the COVID. So X of that, the revenue growth seems in line. But what we have to see is that in this quarter, most of the company had the impact of COVID. But if you see in terms of the deal wins have been strong. So there has been a pickup in retail. So BFSI is strong, and also there has been some big wins in the communication space. The Lucent, the Ericsson deal. So, but overall, I think TCS is in a strong footing in terms of growth. I think, as it has been alluded earlier, the tech sector is on for you know a multi-year tailwind in terms of demand. So I don't think that there is any issue on the demand front. So mostly, we were expecting some issues on the on the supply side. So maybe the attrition numbers that the TCS has reported, as I said earlier, is actually giving us comfort that like TCS has been able to manage the factors on the supply side also well. So I don't think so there is any issue. So in terms of our expectations, we are expecting like 12% and a 14.5% like revenue and EPS CAGR over the next 3 years for TCS. And in terms of PEG, I think if you see the sector in terms of PEG, it is not the costlier. So on a PEG basis, we are at around 1.8 like times, and the sector is at around 1.6 times. So I think that is like fair enough in terms of valuation. So on an absolute basis, it appears to be stressed, but on a PEG basis, because there has been acceleration in the revenue and EPS CAGR, so I think on a PEG basis, the sector seems attractive.
Sudhir, I have one question to you. This is Poonam here joining in. Looking at the results, yes, even I would say that if I am looking at the 18-hour poll, the revenue is a slight miss, as well as the EBIT margin is a slight miss. But given the entire underlying strength in terms of the order book, and given the overall commentary that has come in, do you think that TCS can clock in a double-digit growth for FY22 even despite these numbers? Are you getting that confidence? Sudhir?
Yeah, is it better? Yeah, so double-digit growth should not be an issue. So that assumption for FY22 should not change. But one should keep in mind that let's say year growth for FY22 or even for this quarter, first quarter of FY22, is a sort of vanity metric, because we had seen a very sharp dip in revenue in June 2021, or even overall FY21 per se. If you look at it, I think most of the companies would have reported either revenue decline or flattish revenue. In the case of TCS, the revenue would have been flattish in FY21. So that base impact, a bit of correction of the base should definitely help the company in terms of reporting a double-digit kind of revenue growth in FY22. That should not be an issue. Despite the miss in terms of revenue in this quarter, I still don't think, I still do believe that the company will do double-digit growth. But I think the right way of looking at it, the right way of interpreting the data here is to look at a 2-year CAGR, so that we'll arrive at a normalized sort of growth scenario rather than just looking at FY22 growth. Because on a very low base, growth tends to be optically high for most of the companies. In fact, it's not just for IT sector or TCS, but across sectors, across geographies, across markets, we are seeing this low base effect sort of a phenomena pushing up growth rates in FY22 or CY21.
My last question to you is, Amit, in terms of the BFSI segment, do you think that the kind of does it seem to give you the confidence that this segment is going to go strongly, because it's grown 3.1% sequentially in constant currency terms? So what's your take on just the growth in the BFSI segment?
Yeah, so obviously, the BFSI segment has been, a very important growth driver for the, for the sector also and for TCS also. But you have to see that, BFSI in 4Q was pretty strong, because we had, like those bank systems and potential corporate, like potential contribution in the fourth quarter. So based on that, on a sequential basis, it's looking a bit muted because of a higher base in the last quarter. But in terms of the deal wins and in terms of their positioning in the BFSI sector, I'm not really worried about this. So, and you have to see that the other verticals like retail and CPG, communication has been really picking up well. and we have also seen some like deals from the airlines as well. And their like wins in the European geography has been pretty strong, and they have become the number one player there mostly. So I think overall, we had some impact of COVID in this quarter, but if you see for a double-digit growth, the required CQGR growth for the next 3 quarters, is around like 2.5 to 2.6%. So that is not a very big ask. So to post a double-digit growth. So I think that is easily achievable based on the deal wins that they are reported. So I'm not like worried about this third quarter.
Take that point forward, Sudhir. Wanted to understand, what do you think is going to be the management commentary around pricing scenario? Could that be a challenge? Because, while the management is sort of gauging the sentiment, saying that God knows what's going to happen if there is a third wave, but while they do see long-term visibility in the business, and given the kind of recovery that we've seen, like Amit was just rightly highlighting, with the European segment, or rather the European geography, or for that matter, a large part of the Western world, which shouldn't be problematic for TCS, but just purely on the pricing scenario, what do you think is going to be the management commentary?
At least based on our understanding, or going by the commentary of different managements, including TCS management in the past, pricing is not an area of big concern, and most of them have alluded to a stable pricing sort of a scenario. So I don't see a big reason why market should be worried about pricing per se. But in general, one should be watchful of the fact that growth rates have been trending down towards pre-COVID levels, and we can always slice and dice one particular segment and see the portfolio X of that. But if you look at overall company level growth, what we are noticing is that it has been trending down towards pre-COVID levels, and that's the bigger point to take home at this juncture and from this result.
Yeah, absolutely. I'm just waiting for the constant currency figures as well to try and dissect the numbers further. But the last time we did have Rajesh Gopinathan, the CEO and MD at TCS, speak with us, he sounded extremely bullish. That's the previous quarter. He said that they're definitely looking at double-digit growth. It is a high possibility, and that the management is very committed to achieve the same. Sudhir, would you want to react to that? And do you think a double-digit growth is likely for the full year?
Yeah, as I said earlier, double-digit growth is definitely likely, and that should not be a concern at all. My bigger point here is, let's say for most of the sectors and most of the companies and most of the markets across the world, we will see very strong growth, let's say double-digit or high teens kind of a growth in FY22/CY21. But that's my bigger point here is that's more of a base effect. It's more of a optically misleading thing, because we have a huge, let's say, dent in FY21 base. So the base obviously is dented. The next year in terms of year-on-year growth will look extremely good, extremely strong. But if you were to understand it properly, then the better way of looking at it is to take a 2-year CAGR on a compound annual growth rate basis, because most of the companies either have reported revenue declines in FY21 or reported flattish revenue in FY21. If you take FY21 and FY22 growth and see the compounded annual growth rate, that will give you a better picture of underlying demand, rather than just looking at FY22. FY22, definitely most of the companies should do double-digit growth. That's well priced in the current market prices, and there is absolutely no doubt about it.
Yeah, that's a pertinent point. And Amit, just your thoughts here, because, like Sudhir rightly mentioned, that because of the big dent that we saw in the previous year, optically a double-digit growth is obviously going to look bloated because we're working with a low base. That one key thing, Amit, that you're going to be looking out for from the management commentary, which should be just any minute now, we should be hearing from the management, they should be addressing the media. Okay, I think we can cut across right away.